In this video, I'm going to break down 4 key things you need to start 2026 as a day trader properly. First, we'll go through how to actually start trading using prop firms, what they are, how they work, and how to approach them without rushing or blowing evaluation accounts. Then I'll walk you through a consistently proven trading system, not something overcomplicated, but a repeatable framework you can apply every single trading day. After that, we'll cover technical analysis, what actually matters on the chart, what to ignore, and how to read price action with clarity instead of indicators everywhere. And finally, trading psychology, which is hands down the most important part, because without the right mindset or discipline, even the best strategy will not save you. By the end of this video, you have a clear structure to take into 2026 with confidence. Becoming a successful trader isn't about one big trade or one lucky month. It's built through consistent effort and discipline, showing up every single day with the same process, the same rules, and the same mindset. Most people fail in trading not because they don't have a strategy, but because they can't stay consistent with it. In 2026, the goal isn't to trade more, it's to trade better, trade cleaner, and stay disciplined. Everything I'm showing in this video comes from real screen time. I have over 16 months of live market experience trading real conditions. I use a straightforward ICT based strategy, nothing overcomplicated, just a clear framework built around price action, liquidity, and structure. The focus isn't on chasing massive wins or perfect entries, it's on consistency, executing the same process every day, and letting results come from discipline over time. This is the exact approach I use and what I'll be breaking down throughout the video. Alright, let's get into the first step, how to actually start using prop firms. Prop firms give you access to capital without risking large amounts of your own money, but they're also where most traders fail by rushing the process. In this section, I'll break down how prop firms work, what rules actually matter, and how to approach evaluations with a long term mindset, not a get rich quick mentality. If you treat this part correctly, it sets the foundation for everything else in your trading journey. So, what exactly are prop firms and why do so many traders use them? A prop firm allows you to trade with firm's capital instead of risking large amounts of your own money. In return, you follow a set of rules, manage risk properly, and keep a percentage of the profits you generate. The biggest advantage is reduced personal risk. You're not putting your life savings on the line while you're still learning and refining your edge. Prop firms also give you a built-in structure, daily loss limits, max drawdowns, and clear rules that force discipline. Prop firms aren't a shortcut, they're a tool to help you trade professionally and stay consistent. With prop firms, rules always come first, before strategy, before profits, before confidence. Things like maximum drawdown, daily loss limits, and consistency rules are non negotiable. This is where most traders actually fail. Not because their strategy doesn't work, but because they break rules when their emotions take over. One oversized loss, one revenge trade, or one undisciplined day can wipe out weeks of good trading. If you respect the rules and manage risk properly, your strategy finally gets a chance to play out. If you're just starting out, the biggest mistake you can make is trying to do much too fast. The beginner approach is simple, start small. One market, one system, one trading session. You don't need multiple strategies, dozens of indicators, or to trade all day. Simplicity and discipline matter more than anything earlier on. When you limit things, you learn faster, you stay more consistent, and you build confidence the right way. Master the basics first, everything else comes later. The system I use is ICT based, but it's been simplified to be clear, repeatable, and rules driven. No constant switching strategies, just a framework you can execute every single day. This approach works especially well for prop firm accounts because it prioritizes risk control, consistency, and clean execution. In the next slides, I'll break down the exact system we'll use to trade prop firm accounts step by step so you understand not just what to do, but why it works. The core of my system are a few key concepts, and once you understand these, the charts become a lot clearer. First is liquidity, understanding where stops are likely sitting and how price moves to take them. Then we have fair value gaps and inverse fair value gaps. These help identify areas where price is likely to react or rebalance. I also focus heavily on market structure, knowing when the market is trending, consolidating, or shifting direction. And finally, high probability time. Not trading all day, but waiting for specific times when the market is more likely to deliver cleaner moves. When these pieces line up, it creates a simple, high quality trading environment. We focus only on the New York session, specifically the first 90 minutes of the AM session. This is when volume and volatility are at its highest and when the cleanest, most intentional moves tend to happen. By limiting our trading window, we avoid overtrading, reduce emotional decisions, and stay aligned with our rules. We're not trying to trade all day just for highest quality part of a session. So what exactly are we looking for before we take a trade? First, a liquidity sweep, price taking out an obvious high or low to clear stops. Secondly, alignment with the higher time frame. We're trading in the direction of a larger market bias, not fighting it. Thirdly, entries at premium discount, making sure we're not chasing price, but entering at the areas that make sense with market structure. And finally, defined risk. Every trade has a clear invalidation point before we ever click buy or sell. If these conditions aren't present, we do not trade. Patience is part of our strategy. Every trade uses fixed risk, the same amount every single time. We're not increasing size, not trying to make any losses back. Every trade also has a clear defined stop loss. If a trade is wrong, we accept it and move on without hesitation. Targets are based on market structure, not emotions, not hoping for more. We let the market tell us where price is likely to react. This approach protects capital, controls drawdown, and fits perfectly with the prop firm rules. This is the real edge in trading, and it's not a secret strategy. Profitable traders are disciplined, they're consistent, and they've perfected their risk management and their rules. The strategy does matter, but you need a system that makes sense. But the real edge isn't the strategy itself. The real edge is discipline and consistency, showing up every day, executing the same plan, and staying in control no matter the outcome of the last trade. So, why do most traders fail? It usually comes down to these three things: overtrading, breaking rules, and a lack of patience. Traders take setups that don't meet their criteria, increase risk after losses, and force trades out of boredom or emotion. Most traders don't fail because they lack knowledge, they fail because they don't follow their own plan. If you can control these three things, you're already ahead of the majority of people. Always remember, process over profits. Your job isn't to make money today. Your job is to follow rules, execute cleanly, and manage risk properly. When you focus on the process and stay consistent, the results take care of themselves over time. Not chasing outcomes, but building a repeatable, disciplined process. It's important to set the right expectations from the start. Trading takes time. Losses are a normal part of the process, even for profitable traders. The goal isn't to hit home runs or double accounts overnight. The goal is consistency, stacking small disciplined wins and controlled losses over time. If you can stay patient, trust the process, and focus on a long term consistency, the results will come. Here is my final advice: master one system. Keep it simple, be patient, and above all, master your discipline. You don't need more strategies or more indicators. You need consistency, repetition, and control over your decisions. If you can commit to that, you give yourself a real chance to succeed as a trader in 2026. It's also important to be clear about who this isn't for. This isn't for anyone who's looking for shortcuts or guaranteed profits. Trading does not work like that. It's also not for people who aren't willing to follow rules, manage risk, or stay disciplined, and even when things do not go their way with trading. If you're serious about learning, staying patient, and treating trading like a skill that takes time to develop, this is the approach for you. For those who want to take it a step further, my premium service gives you full access to the complete system. You'll see live trade executions, follow a disciplined plan, and learn exactly how to apply the strategy in real market conditions. It's not about shortcuts or guarantees, it's about seeing the process in action and learning how to trade with consistency and control. Remember, start simple, stay disciplined, and focus on the process over the profits. Trading is a skill, and consistent effort is what separates successful traders from the rest. If you apply these principles, 2026 can be your year to trade with clarity, confidence, and control. Thanks for watching.